Hi guys, welcome to the first video that I'm going to do on this channel. I am going to try to document everything that I do on my small account, which I'm going to fund with £1,000 to hopefully try and cement the skills that I'm trying to achieve doing this. So I'm doing a small account challenge for the course of this year, trying to document the process. I'm going to be using mostly strategies from Jack Corsellis, Mark Minervini, um, Richard Mogden, and other people, and mostly focusing on something called a VCP, which is a volatility contraction pattern. So what that basically means is you get a period of market moving upwards, and sort of creating sort of base or a basically breakout to the upside. So in this instance here, we'll be looking at the contraction and then obviously a break to the upside once it breaches. And then obviously you've got this huge move here and a base above here. It can be likened to something like the cup and handle, which is something that you see in common technical analysis books and charts. So yeah, so with my small account, I'm going to be trying to trade that and seeing how it goes. So I picked 3 stocks to start this off, based on their technical chart patterns. I'm using the 50, the 20, and the 9 period moving averages. I'm also using something that I created, which is fairly new, which is the Hekanashi. I don't think you can actually see them on this, but I'll get rid of them for now anyway. But yeah, essentially this is what I'm doing. So we'll just get right into it. So obviously the first stock is Goldman Sachs, which has got a relative strength ratio of 92.9, which is about 93, with finance being quite a good sector, quite a strong sector. We've had a couple of legs higher. We had obviously this massive correction back in April when Trump was initiating a lot of the tariffs, but after we broke out of sort of 585, 590s, we've had a massive move to the upside. Price has been riding at least the 20 and the 50 EMAs for a prolonged period of time, and it's likely to continue with a 4% day on Friday, Friday the 3rd. So yeah, so we are looking at obviously the break of this level here, and then seeing if price can start to break this high here. So a nice little contraction. Hopefully it breaks higher. The stops would have to be below 805, because I believe if this fails, you could see something like this, and then before it eventually changes structure and heads higher. But that's obviously Goldman Sachs. Reddit, I sort of marked this up before, but I'll do it again. Was a recent IPO in 2024. Not many IPOs that you've seen recently. Had a massive base coming into it. So again, you can see what we're talking about here. You get a massive base before the move higher, and then obviously this correction here is obviously the correction that we had in 2025, when a lot of the stocks went lower because of obviously tariff reasons, etc. And so you had a nice break above 124 before another push higher, and then market sort of came back down and has created sort of another pattern here where this sort of can be recognized as a structural resistance break before the market moves higher. So this is a lower risk entry because it's a recently changed structures to the upside, whereas Goldman Sachs is already up at the highs. So if this was a low risk entry, we'd be sort of looking at around about 840, but Reddit is sort of still yet to reach the highs. So Reddit is probably a better entry. And then obviously Rocket Lab, of course, had a huge VCP pattern down in here. This entire level about $7 ish was a nice pattern. So obviously market bottomed out. We had a nice base entering 2020 entering 2025. We then had the breakout. So market retested the 17 levels. Had a nice volatility contraction pattern here before another break here, and then obviously has been moving in steady waves. So recently broken out. Let's see if the price will hold up at these levels, sort of 75, 76 levels. But again, between this chart and the Reddit chart is looking to me like is the one that's got the lowest risk, because if the price does indeed fail to breach this high and move on higher, then you're looking at a fail safe of about 208, which is only, if I look at my chart, which is only about 15% dip from where it is currently. Whereas Rocket Labs, realistically, your stop losses has to be down towards the 50 level, which is a 32% dip, and Goldman Sachs, which is something like another 15% dip. So it also depends on obviously the volatility, but yeah. So obviously this is the first video. I will enter at least one of these positions, and then I will update you on the course of the week as to how it's gone. I'll try to make these videos a bit better, so that they're easily understandable. But yeah, thanks very much for listening, guys. Cheers, bye.